Okay, so you're running a project and you're constantly going to face this one critical choice. Should we build this thing ourselves or should we just buy it from someone else? Now, this isn't just about the price tag, not at all. It's a huge strategic decision that can literally define your budget, your risks, and yeah, your ultimate success. So let's break down the make or buy decision. In this explainer, we're going to start by framing this as the core strategic choice it is. Then we'll dive into the decision logic itself. We'll see it in action with a real-world scenario, look beyond that initial price tag, and finally, and this is a big one, we'll cover the common traps you are absolutely going to see on the PMP exam. You know, the make or buy decision is really where your whole procurement strategy kicks off. It's that exact moment you decide, are we building this in-house with our team? Or are we going out and sourcing it externally? Getting this right from the jump lays the foundation for everything that comes next. Now, from a PMP perspective, this is a cornerstone of the plan procurement management process. It's not a guess, it's a formal analysis to figure out if you should produce something yourself or go get it from a vendor. And trust me, this one choice has massive, massive implications for how you'll manage a huge piece of your project. I want you to think of this decision as a strategic bridge. It all starts over in resource management when you identify a need. Then, the make or buy analysis is where you evaluate your options. And your conclusion there? That's what kicks off the entire procurement management process. It's the absolute essential link connecting what we need to how we're going to get it. So, how is this decision actually made? Well, it's definitely not a gut feeling. It's a really structured analysis that balances three critical factors: cost, capability, and of course, risk. And these are the three pillars of your analysis. First up, economic efficiency. Which option just makes the most financial sense? Second, technical capability. Do we actually have the skills to do this right? And third, risk optimization. Which path is going to expose us to the least amount of danger? Let's dig into how these pillars play out. Now, what's really fascinating about this slide is how it just lays out the trade-offs so clearly. When you make something, you have to account for all those indirect costs, like training your team, the overhead, not just their salary. But when you buy, and this is the crucial part, you're not just paying for a product, you're paying to transfer the technical and operational risks over to an expert vendor. That's a huge deal. All right, enough theory. Let's see how this actually works in practice. We'll use our ongoing case study. A big high-rise construction project. This should make the logic crystal clear. Okay, so our project needs a high-voltage electrical grid. Let's look at this ledger. The make option. Honestly, it's a nightmare. It means hiring a whole new team, buying millions in equipment, and we'd be taking on all the liability for any mistakes. The buy option? Yeah, it has a higher initial price, but it leverages a vendor's existing expertise, their equipment, and their insurance. You can see right away how buying transfers that risk and frees up our core team to focus on what they do best. The decision here becomes totally obvious. You know, a junior project manager might stop at the initial price, but a senior leader, a real pro, thinks bigger. So let's elevate this discussion to the concepts that truly define strategic procurement. And the first concept here is total lifecycle costs. A make decision might seem cheaper today, but what about the cost of long-term maintenance? What about support and eventual disposal? When you factor in the entire life cycle, it often reveals these hidden expenses that can make the buy option much, much more economical in the long run. This is a really sophisticated trade-off. When you make, you have total control, but you also have total responsibility. When you buy, you give up some of that control, but what you gain is certainty and predictability from an expert. But here's the real strategic question. Is this a core competency we want to develop in-house? If the answer was yes, then making it could actually be a long-term investment in your company's own intellectual property. All right, let's get right to it. For those of you studying for the PMP, this section is absolutely critical. PMI loves to test this logic with some very specific, tricky traps. Let's break them down. So what are these traps? Honestly, being able to just spot them on exam day is half the battle. Let's walk through the three most common ones you're likely to see. First up, the exam might try to disguise a simple math problem as a make or buy question. If you're asked to decide between renting and leasing equipment, listen closely. This is not a strategic make or buy analysis. It's just a break-even calculation. All you need to do is find the point where one option becomes cheaper than the other. So for example, let's say the exam tells you that the equipment's purchase cost is $50,000. And let's say the lease cost is $2,000 a month. The math here is dead simple. $50,000 divided by $2,000 gets you $25. That means the break-even point is 25 months. If you need it for longer, you buy. If it's for less, you lease. See? It's just a calculation, not some big strategic decision. Okay, trap number 2 is overlooking fixed versus variable costs. If you decide to make something, you're often taking on fixed costs, like employee salaries. Now, even if your project scope gets cut in half, guess what? You're still on the hook for those full salaries. A buy decision, on the other hand, is often a variable cost, which gives you way more flexibility to scale your spending up or down with the project's needs.
And here it is, maybe the most common trap of them all, the myth of the free internal resource. An exam question might suggest, hey, you've got unassigned staff available. But according to PMI logic, no resource is ever free. Their time has an opportunity cost. What else could they be working on that's more valuable? Plus, using a non-specialist can lead to costly delays and quality problems. So the crucial point is this. Always, always optimize for your project goals, not just for keeping your staff busy.
So let's tie all of this together. At its core, the make or buy decision is a tool for planning your procurement. When you're making your choice, look beyond that obvious price tag to include all the indirect and lifecycle costs. And remember that fundamental trade-off. Buying transfers risk, but you give up some control, while making retains control but also all of the risk. Ultimately, it's about deciding whether to leverage outside specialists or develop your own capabilities. Master these principles and you've mastered the logic. The make or buy decision is such a critical starting point. But once you decide to buy, you've only just begun. Now you have to structure the formal, legal relationship with your vendor. Which brings us to our next big question. The decision is made, so now, how do you build a partnership? We'll cover that in our next explainer when we dive into mastering contracts.